Hi, welcome to the AML workshop. My name's Steve Armstrong, and today, for the next sort of half hour, 40 minutes, I'd say, we're going to run through some key tips, some hints, some helps just around AML, and specifically around AML operations. Um, just before we start, if you do have any questions throughout, please use the chat function. This will enable us to get to your questions, ask your questions at different points throughout the presentation. So please do engage, and we'll get to the questions at the end. So let's just do some introductions. So my name is Steve Armstrong. I'm the founder of FRL Compliance Solutions. What qualifies me to sit here to give this AML workshop? I was the group MLRO at Betway, William Hill, and previous to that held MLRO positions in the finance world um, over sort of a span of about 16 years. We've been sort of running FRL now for the last sort of 18 months, working with clients around AML compliance and ops. Also want to do a shout out to Shifty, who are sponsoring this. For those who don't know what Shifty, they provide automated IDV and screening tools, solutions, helping businesses confirm customer identity, screening, staying compliant in real time, fraud tools, and there'll be a bit more as we get through the presentation on Shifty, but a big thanks for them for sponsoring this session. So today we're going to talk a little bit about what follows after this workshop. It's not a sales pitch, I promise. It's simply a bit of info on what the full workshop looks like. We're then going to jump into a bit of playbook on AML. And like I said, there'll be some time at the end for questions if obviously anyone has any. So just a little bit of information. So this course is obviously put on by Gaming Operations Academy. We will be running a further course past this that will be 2 3-hour sessions that will really dive into different elements of AML. As you can see on the deck, we'll be talking, on the longer sessions around sort of why it matters. We'll be talking about legal and regulatory framework, core money laundering risks, some real tips on customer due diligence, ongoing monitoring, all the way into sort of culture, accountability. So that course will run from the 27th to the 28th of January. The price is there. We do have a link, and obviously that will be shared on comms after by Adam and the team. And it will be in a similar format to this. So it's a live session delivered online via the Learning Hub, interactive. There'll be lots of breakout sessions. There'll be lots of sort of practical tools that we can take away and apply and put into our businesses. So again, there'll be a little bit more on this at the end of the session, but mark that in your diary, 27th and 28th of January, 3-hour sessions. Don't worry, it's not just me talking for 3 hours. There'll be lots of interactive elements of it, lots of live examples, and a chance to really dive into some of the key topics that sort of present in gaming at the moment around AML. So today we're going to talk a little bit around the operations of AML, and this aim is to give you a little bit of a taster of what the real course will look like, in a sense, the longer course, but also just to take some key findings away that hopefully you guys can use in the different roles you hold across your different businesses. We want to look at sort of a bit of a step-by-step guide on some of the operational pieces. I think a key topic around at the moment, certainly what I'm hearing, is around first line, second line elements of AML. Do we all understand that? Is our first line strong enough? Let me look into some of the multi-jurisdictions. Is our model built to manage all of these different jurisdictions? And as regulatory landscape changes, and we start seeing more sort of, potential operators using different licenses, how does that impact our operations? And then a little bit just around, that operational risk element and sort of, are we ready? Are our controls fit for purpose? Are we doing the right things at the right time in the right order? So let's talk about what this focuses on. And I think when we touched upon it just then around the front line, around the different first and second lines. When you look at sort of the frontline support staff, what we're talking about is talking about payment agents, fraud analysts, operational staff, customer service, support. Um, they're our core first line of defense. They perform our KYC checks, our payment checks, manage our withdrawal controls. They're there to spot unusual activity, escalate that upwards. And I think this is really key. I think in over the years, this has changed a little bit where potentially our first and second lines have been clouded across different businesses. Certainly in some of the companies I've worked at in the past, this was a real clouded line where the business was really sort of unable to distinguish between that in certain circumstances and create that independence. And that independence is really key across all of this. We then got our sort of AML investigators, analysts. Again, they'll be called different things, but they're your sort of hybrid line, what I like to call it. They're there to take them alerts, analyze, conduct EDD, compile internal SARS. And again, I think it's really important that there's this independence around that so that you've got that extra pair of eyes. Again, using practical examples, if you've got the same sort of frontline person managing all of your risks from start to finish, then actually what you could end up is you could end up, there could be a lot of pressure put on them from the business. It could be about meeting targets rather than actually the quality of analyzing something. And also, if we haven't got the right tools in the front line, then what that could lead to is that we're speeding um, through alerts or checks in order to meet potentially an operational deadline. You know, you might have to hit your 50 a day or your 100 a day. Um, so without the right tools, that the AML sort of investigator funnel becomes even more important. And then our MLROs, your final decision maker, who are reporting, they're providing the AML oversight for the business. Like I say in the intro, I held this position for a span of probably about 12 to 13 years across different industries. And it's, I think, one of the biggest challenges that I certainly faced, and I'm sure some of the MLROs who are watching this now face, um, is that element of oversight alongside being able to be commercial. I think it's a really important thing to remember throughout all of these courses, and anytime I'm talking on that situation, is that I find it really important that AML is not just about stopping a business. It's about being commercial. It's about understanding your risks so that you can enable the business to be commercial. We can't be in a situation where our AML function is there to stop a business. It's got to be there to keep the business within the guardrails that are being set, and so it enables it to grow, meet its objectives, and ultimately be profitable. So I think that's something always to bear in mind, and certainly into the when we look at the 2 hour sessions, the 2 3 hour sessions, sorry, that is a topic that we'll dive really deep into around an AML framework that enables a business to meet its objectives in a compliant and safe way. I think that's a really, really important sort of takeaway from this, that um, too many MLROs are probably seen as business prevention, business sort of the no guy. And actually, with good framework and having this embedded into your business, it's actually an enabler rather than a blocker. So let's talk about some of the high level risks that potentially we face in our industry, just to give a little bit of sort of context to what we then go on and talk about in terms of playbooks and workflows. When you look at it, you got your deposit and withdrawal loops, low gameplay. After high deposits, someone storing funds in a gaming account, third party payment use, which I think is becoming more and more sort of common for all of us. Certainly in a sense of around sort of that clouded area between AML and responsible gambling and social responsibility, where potentially people are using third party payment methods because they may be self-excluded, or they could be put a block on their bank account for gambling transactions. So that's becoming more and more common. Risk, multiple accounts. This is one that during my time in the industry was a real sort of risk that we faced, where people would potentially put limits on their accounts and then try and sort of sign up with a different email address, potentially different characters in their name, fuzzy, and if you didn't have the right tools in place, didn't have the right um, systems and alerts, and actually some of these could potentially cause some harm into your business. Then around high risk jurisdictions, as our business develop, we all see the UK announcements as businesses start moving to other jurisdictions because potentially higher taxes in the UK, or stuff like um, sort of regulation, tightening of regulation, the cost of running compliance, that actually we open ourselves to more sort of them high risk jurisdictions. So again, a risk that's growing, in my opinion. Then your sort of typical bonus abuse, etc., always going to be there in the industry. Um, Depending on sort of the promotions, etc. And then what's becoming a growing risk is this crypto exposure. I'm sure anyone who's worked around sort of the due diligence teams, KYC, EDD, source of wealth, you know, that's becoming certainly a bigger risk, and sort of more information is needed on how we manage that crypto um, in them flows, to enable us to understand it, for one, but secondly, to enable us to be able to use it in a positive way. Not all crypto risk is bad. I'm an advocate for it. I think it'd be great for the industry if it's done in the right way, but it's something that we need to manage. So there's some sort of examples of some of the risks that we use. Just to give an example from my sort of working world, was when we talk about multiple accounts. One of the things I once saw was a lawyer opening accounts for different people across many different industries under different names, but actually there was the same ID on every account. It was the same individual operating them, um, and stuff like that. It was only found because of IP checks, because of sort of deep dive investigation work by the teams. So it's becoming more complex, and that's why tools sort of and enhancements are needed in this area. Let's talk about sort of that onboarding checklist. And what we're going to do now is we're going to go through the different elements of our sort of ops across that AML due diligence world. As you can see, I think this is the most relevant slide to our sponsor, Shifty. So who obviously offer a lot of these solutions. They didn't ask me to put that in. That's the disclaimer. But I thought, as they're sponsoring it, I'd add a few of their logos along the way. But when we talk about this onboarding checklist, what are we doing and why are we doing it? We look at your full KYC, name, date of birth, address, and I think as you look in different jurisdictions, that can change sometimes. Are we relying on automated checks? Are we still requesting sort of ID and documents, proof of address? Are we doing automated on entry and then at sort of 2K mark doing further checks? Different ways to deliver that across different operators and across different markets. We're then looking at your document verification and liveness. Is Steve Armstrong the person he says he is? Am I the one holding that phone? When we talked about them risk and the multiple accounts and the third party use of them accounts, and this is becoming more and more key to mitigating them risks. We then have our full checks. IP, it's very difficult. The world of VPNs does make it a lot harder with device and IP, but actually it gives us really key data in terms of how we're able to manage our onboarding, and more importantly, how we're able to assess our customer and the risk of that customer. Are they at different IP addresses? Are they using multiple devices? Lots of different things that can impact that. And it's a really key sort of onboarding driver at the moment in that world of risk assessment. Then we look at payment method ownership, validation. Is it third party funding? Is their card theirs? Is it a joint account? All of these different elements. We then have our screening, sanctions PEP, against the global watch list. So then we have the adverse media. And again, this is a real tricky one, what I believe, for the gaming industry, certainly across online and retail, is that um, is the likelihood is quite low, but the regulation pushes us to do this. And it's very unlikely. I mean, in all my time across the different operators I've worked with, I don't think I've ever seen a sanctioned individual. But yet the regulations push us really hard to ensure that we are doing the screening, doing what we need to be doing, and ensuring that that we're meeting them obligations. We then have this red flag sort of assessment, inconsistencies, the sign up, and that could be different types of thing. Is it a sign up that happened sort of instantly? Is it a computer driven sign up? All of these data all becomes part of what we're now sort of bringing in on the onboarding checklist. And I think that's going to become more and more important as AI and as sort of technology enhancements happen. Then actually, what we'll start seeing is these sort of computer takeovers where they're potentially signing up hundreds and hundreds of accounts in seconds. What all this brings you to is this element of a risk assessment, and all this information that we have here is information that can risk assess a customer from an AML perspective, pretty much on entry to your book, to your online casino. And why I say that is that, obviously with a deposit, if they don't deposit straight away, then that's slightly different, but then the risk is minimized because there's no transfer of funds. But actually what we have is we have a core set of information that can enable us to say, you know, is this individual of higher risk to us, and do we need to perform any other checks on them? So when we talk about some of these red flags in that process, we've got the common ones: fake, forged documents. And again, back in I think without the sort of technology enhancements that have happened over the last few years, what you would have seen is a lot of sort of companies having to do this manually, with agents checking ID and documents from different jurisdictions, and that becomes quite difficult to manage. So certainly if they're in PDF format or they're scanned, to really be able to tell if they're forged or fake. So the enhancements in technology enable us to be a lot clearer and a lot better on this. One of the biggest red flags for me during the process is obviously if a customer refuses to send something. Um, there'll be a select few individuals in the world that potentially would not send it because they're worried about data and their data are being handed. But everyone knows now to sign up to an online casino or sports book, you need to provide KYC. It's common knowledge. So that to me is one of the big red flags, and that happens throughout a journey, not just on onboarding, but if we're asking for the source of wealth, if we're asking them for different elements of, could be payment method, it could be confirmation of contact details, address. If a customer refuses that to me has to be one of the largest red flags. Then stuff like high risk countries. Do they have links to high risk countries? Are they high risk? Are they a national from a high risk country? Then with the whole third party bit, which we touched upon before. Immediate withdrawal attempt. It's very unusual that someone would deposit and then immediately want to withdraw. Generally, if they're not sure on the product, they'd have already gone around the book and had a look if it's offering a certain market they want or the certain game they want. And then obviously your sanctions and PEP sits. And like I spoke to before, PEP probably a bit more common, but certainly from a sanctions perspective, it's not too common that in the gaming world we're faced with that. It's not seen as an attractive way for someone who's sanctioned to spend their money or to try and move their money. But obviously the regulations mean that we have to ensure that we are doing that screening. We then move on to looking at a different element. So we're let's part the onboarding. So someone's been onboarded, they've come through the journey, we're comfortable with them, we're comfortable with the fact that they are who they say they are. They go and place a bet and they're a winner. And I think one of the biggest frustrations across the industry is that initial, once someone's into the book, they believe that they should be able to withdraw it instantly. Um, and I think that one of the key elements of managing that is internally is understanding that process and having a clear and precise process to be able to manage it. So when we look at our playbook here, are they verified? They should be verified. If they've got to the point where they're able to do a withdrawal, you'd like to think that they are verified, but you might have a different framework that talks to different elements of maybe time or value that would mean that certain elements of the KYC would be needed completed later on in the journey. If someone deposits £10 and wins £10,000, then they may need to go and undertake further verification. I think the key here is the terminology we use, as not just as MLROs, but as customer support staff in that. It can be quite a frustration from a commercial element, that someone has come on been allowed to spend their money, but then can't take their money out. So, has our verification been done? It should be a quick check. It should be a yes, it's up to date. Is their payment method consistency? Is it closed loop? Are they trying to withdraw from a different method? Have they potentially paid with a prepaid method, but now they're trying to push it back through a PayPal or a MasterCard Visa, for example? Have we looked at their gameplay? Was there anything unusual about that? Were they were they betting on obscure markets? Was it the fact that they came in and um, played played one game and ultimately got lucky? But it's understanding that behavior, and that's quite difficult depending on how long the customer has been a customer. If that person wins day one, then the game plan deposit behavior we have is a lot less. Whereas if someone has been a customer for 6 months, then obviously we have more behavioral elements to be able to analyze. Um, do we need source of wealth, source of funds? Has it been required in the past? Do we want to understand, is it a large sum of money that's leaving? Have they spent a large sum of money? Do we really know where that money's originated from? We all know the frustration and the impact that source of wealth have had across our industries in the last few years. And I think that as an industry, we're getting better at it. I think the key here again is partly using technology, but also gaining a greater understanding between what the expectation of the regulator is, and then what the expectation of the individuals who govern that framework. Myself as an MRO compared to a different MLO may have a different appetite for what's acceptable, what's not acceptable. Um, then in terms of any reviews, is there anything outstanding? Have we tried to reach the customer on their mobile and we couldn't? Is there, are they non-responsive to other alerts? All of this needs to be taken into account. And then obviously, the final stage is, are we approving? Are we not? Are we escalating? And I think this is really, really important because um, this is where the transaction takes place. And when we talk about sort of the element of money laundering, you know, up until this point, the circle isn't complete. So we haven't actually got a full money laundering flow yet. But once that money has been released, then obviously that's closed, the loop's closed. And this is where potentially we then could have some money laundering issues if we haven't done our verifier, our check, our analysis, our reviews. All of these are really important. And as much as it can be frustrating to the customer and it can be frustrating to potential internal teams, it's a really key one. And the more we've got technology and the more we've got an understanding and a clear process, this process will only get quicker. And with that, it can become a commercial enabler because actually customers will get their money back quicker. It will enable your business to potentially use real time payments, real time withdrawals, rather than sort of relying on a 2 day cycle that then means that the customers without their funds for 2 days. So, what are some of these red flags when we talk about withdrawals? What would we look at when we're reviewing that? I think one of the key things is obviously a deposit and then immediate withdrawal. Like I said, it's not something where that should be a common theme. There may be a mistake potentially where someone puts an extra zero on the end of a deposit. Instead of depositing £10, they deposit £100, for example. But in general, they would tend to probably, from a behavioural perspective, go and spend some of that money before looking to withdraw it. Repeated failed withdrawals can be a flag because that could be, is it being operated by a bot? Are they? Is it the fact that the individual is sort of unaware of what they have there within their book? Party bank accounts. I think again, certainly with the element of responsible gambling that sort of overlaps with AML. I think this is a real hot topic. Is it the individual's bank accounts? Have they used someone else's payment method because they might have a block on their account? It could be they're using a spouse, a friend. So again, red flag, not necessarily because they're committing a crime, but actually because they're looking at, obviously, they may be limited across the book because of sort of RG controls, etc. No gameplay, round trip transactions. Again, as money sat there for a period of time and then and then they move it. High velocity activity, you know, there's a lot of money going in and out of an account. Again, not necessarily going to be because of they're trying to launder funds, but it could be a key sort of sign that there's potential responsible gambling issues. And I think this is a key thing to remember, that all of this work isn't just there to rely and stop sort of money laundering. It actually plays a big part in understanding the customer, which can then lead into um, it can then lead into a greater understanding of their sort of behaviors, greater understanding of their responsible gambling risk. And I think it's really important that as we go through this, and certainly in the longer workshops, it's something that we'll really home in on, is that grey area between anti-money laundering and responsible gambling. Um, Unexplained sort of losses, etc., can also be a red flag. Again, not necessarily just from a crime perspective, but also from an at-risk perspective. So once we have this, and we start seeing some of these high-risk customers, we've done our onboarding to what our policy states. We've potentially withdrawn some funds, but then when we talk about enhanced due diligence, and what's required with that, and I think this is a key. Again, it's objective in some elements. In some elements, it is run by your own framework and your own policy. You might have a monetary value to it. You may have a set of rules, a matrix, an assessment. And then there are some that are governed by the regulator, your PEPs, high-risk countries, for example. Um, and I think it's really important that a clear framework will enable us as MLROs, as staff within that function, to be able to be clear with the business of what's expected at certain points. There's nothing worse than, as a customer or as a sort of a support facing staff in the first sort of line, to not understand why something's triggering. And there can be many different reasons. Is it a large single deposit? Is it a large cumulative deposit? Do we have suspicion that it could be linked to crypto, the payments? Are they using higher risk PSPs? Is it prepaid? Do we have multi-account indicators, unusual funding patterns? It can be, many different things that could enable us to trigger this EDD. And the importance of that is to have a clear assessment, a clear understanding within your business of what triggers that, and ensure that through education channels that your staff who are potentially speaking to a customer or managing that process are aware of why something triggers. We can all carry out a process, but actually understanding the why will lead to better results. It will lead to better analysis, and ultimately it will lead to a smoother operation, which will be a positive for the customer, but more importantly, it will be a smoother process within the business internally. More customers can go through it, and that enables sort of a more successful business. So when we talk about that and we talk about playbooks, what are we collecting and why are we validating stuff? Obviously, we spoke a bit about payment method ownership, address verification. I think it's really key. Understanding, is the person that's funding that account the same person that's using it? And then we start talking about source of wealth and source of funds. In the longer workshops, we will really dive into this element because it's so critical and it's such a important part of what we're all facing at the moment across the industry. But understanding that difference between source of wealth and source of funds. Over the years as an MLRO, it's always been a question the regulator posed to myself and the team. It was always around the argument we generally had with them, and it was an argument. Certainly with the UK GC, it was normally an argument. It would be around that source of wealth compared to source of funds. What triggered an MLRO to want to know the direct source of them funds rather than understanding an individual's wealth? Does that individual have employment? Do they have assets? Are they a business owner? Is there a public profile that shows that this individual has wealth? And does that wealth mean that their spend is within sort of a tolerance for that operator, compared to a source of funds, which is where has that money come from? When we talk about payment method ownership, that will drive source of funds questions rather than source of wealth. And I think it's really important that that we do distinguish that. I think it's a key thing that has potentially caused quite a lot of conflict between operators and regulators because of the expectation on it. But also in terms of running a customer friendly compliance sort of process, it's really key to distinguish between, well, when's it important to get source of funds and when are you comfortable with source of wealth. There'll always be an element of opinions within that. And I think that's also important to note that I myself could have a difference of opinion to potentially the regulator, but it's about showing them that you've had a process, that the process has been followed, and that's within the ultimate tolerance and framework. And then when it comes to what do we reject, what are we actually declining there? Was we unable to verify the funds? Was their narrative inconsistent? Did they tell us potentially at sign up that they were, that they worked in a coffee shop, but then when we look at their bank statements, actually they work somewhere else. They work in an office environment, or they say they owned a certain business, but actually that business isn't generating any revenue, or it could be sort of being wound up, or it could be elements that the funds are generating from high risk jurisdictions. Does the documents, not meet the standard that you'd expect? There's all of these different reasons that we could decline EDD, but again, the key here is to have a clear framework and for your business to understand that framework. In the longer workshops, again, we'll really dive into this topic around EDD, around live examples of what's acceptable, what's not, and also trying to show that different people on the course can have very different opinions depending on how they interpret the information. So again, that comes back to one thing, which is having a very clear framework that enables everyone within that business to um, to act within the tolerance levels of the business. So I've called it investigator here, but when we talk about this, this is your sort of hybrid function between first and second. These are your AML analysts, your AML agents, your investigators, whatever we call them. And then it's about understanding, why potentially something's has been alerted to them. You know, let's check the alert reason. Let's look at timelines. Let's understand the customer, review their KYC and EDD before anything. Before we jump into this gameplay or payment channels, we need to understand who the individual is and why they flanked. Then once we dive into that analysis, that will give you a better understanding of their behavior. You know, are we talking about sort of behavior where it's in and out play? Are they playing the same game? Are they playing at certain times at night? Have they told us that during the KYC and EDD process that they work a 9 to 5, but then they ultimately they're logged into their account between 9 to 5? All these different elements to analyze. Payment channels, are they using multiple payment channels? Are they using different payment methods? Are they switching between, prepaid and sort of bank cards? Are they using PayPal? Again, do we fully understand that customer? Do we understand who they are, what they're doing, and what their business is, and ultimately how they're funding that business? Then look at the linked accounts. Again, um, probably 10 years ago, this was always seen as an AML risk. The linked accounts, is their spouse sign-ups on the same addresses of their friends and family. But actually, the more and more that we see that for me, this is an RG piece. Are they manipulating the system rather than committing a crime? And I think it's really important that someone who is at risk using someone else's account, it's a breach of terms and conditions. But if that individual knows, then obviously they're not committing fraud, if they've got the permission of that individual. So again, a really key one here, and it really borders over between AML and responsible gambling. And then that decision point, you know, do we need more information? I think over the years there's been this reliance on the fact that we don't want to ask the customer more information. But I think when it gets to this stage, it's really important that we have everything we need. And because ultimately, if it does get escalated to the MLRO without all of the knowledge, then actually that customer could be blocked for the lifetime. We could, not just from a commercial perspective, we lose that customer, but from their element as a customer, they lose access to the site, to something that that is a recreational hobby for them, they wouldn't be able to do. So are we clear? Are we a clear decision point? Have we got all the information we need? It's not a few times over the years, there's been a nervousness to go back to customers because someone may say, oh, that's tipping off. We're not tipping anything off if it hasn't been reported. So at this stage, we're still fully in the investigation mode. We're still managing the customer. We're trying to gather all the information we possibly can to put us in the best possible position to make the right outcome. And again, we use tools and automation for, KYC, potentially spitting out the results of behavior. But a lot of the time when it comes to this decision point, it's actually a human decision. And again, that can be swayed by opinions. It could be a different risk tolerance. And again, I come back to it. Within your framework that's been set, it should be clear on what potentially needs escalating, what potentially needs more information. And as you get to know your MLRO, you'll tend to know what they tend to look for, what their red flags are, so that actually, you're being proactive and going out and getting that information. And then we get to our SAR workflow, so our suspicious activity reporting workflow. So we've done our checks. We now have our customer onboarded, and we're now sitting and looking at, is this customer worthy to be obviously reported to the MLRO? The investigator thinks it is because they have a suspicion. Now, when we file an internal SAR, it's so important that the MLRO gets all the information they need to make the best decision they can. A lot of the time, this decision boils down to the fact that it could be a higher revenue customer that is good for the business. It could be that there's uncertainty around, do we know enough to make that decision? So that internal SAR being filed, I would always recommend that comes with more information, the better. If an MLRO is having to go and search the systems to find this out themselves, then actually, where is that suspicion? Because without that information, we shouldn't have been able to formulate a clear suspicion. So once we've filed that, then the MLRO may request more information, we'll assess the risk, we'll decide ultimately if we need more information. And at this point, if we do request more information, it's still not tipping off. We've still made no report to the authorities. We've made no report to the regulatory bodies. So at this point, this is an investigation. Obviously, the way we word stuff, and again, in the longer workshops, we'll sit there and we'll touch upon some of the communication that's used with customers around this, because I know that's can be a real sticky point for the business in how to explain this. A lot of the time, it's quite sort of fluffy, I would call it, where it's sort of a few nice words asking for more information that may anger or frustrate a customer. But it's really, really key at this point. We're not tipping off by asking for more information. Once we have all that information as MLO, then it's about deciding, do we file or not? And ultimately, this is where the work that's done prior to this, all the way through, so where we started from our onboarding, have we got the right tools in place to be able to know who that customer really is? Have we done our EDD? Have we processed funds for them? Do we understand their activity, their behavior? Do we understand everything that we can about that customer, certainly in the online space, without actually meeting them? Do we know what device they use? Do we know what their favorite game is? Do we know what sports market they bet on? Are they a cross channel customer? Are they someone who only gambles on Saturday for their football accumulators, or do they like to play certain games? All of this information is so critical to an MLRO being able to make an accurate decision. And the consequences of that not being the case is that could be twofold. One, it may not give the MLRO the right information to potentially report something that is financial crime. But secondly, it could lead them to reporting something that actually isn't, which I think over the years there's been a lot of defensive reporting. If people have been at certain industry events or feedback from the regulator, there was a real stage when the source of wealth world and the regulatory fines started coming in, there was a real onus on reporting more was better. and actually that wasn't the case. The NCA then came out, certainly in the UK, and discussed that with operators around defensive SARs and how actually that isn't helpful because it's just a funnel of reports going in. So actually the quality of that SAR is even more important than anything. Then once that is reported, then we're into that realms of not allowing the customer to know that. Sometimes this can again be tricky. What communications are we using to the customer? How is that managed within the business? Have we got support staff that need to be trained and understand what to say and what not to say? And then one of the big things is obviously then recording and retaining that. As a MLRO, this is so important that you record clearly your decision making, the reason behind your decision making, and ultimately what that decision was, because that there is your defendable position for years to come. That is what you will be relied on if you sit in a regulatory audit, or if you potentially have to present evidence. There's a lot of times where MLROs will have to go and sit in court and give evidence in some of these cases if they ever get to court, where this report becomes their truth. And ultimately, the better work we do throughout this whole process will enable us to make better reports. So that brings us to the end of our operational sort of flow. And again, a little bit of a pitch again on this, but when we talk about some of them things, and obviously we only had sort of 45 minutes today to an hour, it's very difficult to dive into that. But in these other sessions, what we'll be doing is using real examples. We'll be using demo tools provided kindly from our sponsor Shifty in looking at how a customer can flow through automated journeys, what some of them flags will be. We'll also look at real cases where potentially there's been sanctions in the industry. And we'll really challenge, are them sanctions justified? I think one at the moment, if you've seen the recent one around retail, where some of the findings are around screening, and we're talking about screening individuals that are recreationally popping into a shop on the high street to spend potentially £20. Um, and that onus of should we be sanction checking them, we will dive into all of that and how actually we can manage the regulator. So we're not, these courses aren't just going to be around telling you what AML is. We will do that, but actually we'll really dive into some of the themes, some of the current trends we see, but more importantly, giving everyone who comes some tools to take back into their business, be it from an AML compliance role to a first line role to potentially a commercial role, to show how a better process, a better understanding will really lead to your business being able to meet their objectives, both from a commercial perspective, but also to be able to evidence that we're not just a cost. It doesn't just have to be a cost. Compliance and AML and ops can be an enabler. And throughout that course, we'll be showing tips, be showing different elements of this, of how we can really show the business worth of using great tools, but also using humans to be able to carry out and make good decisions. So I'm going to just quickly, again, just some benefits of the full workshop, live examples like I spoke about, some real deep dive examples. There'll be breakout areas, it'll be interactive. I promise you it won't just be me talking for 6 hours. It will be interactive sessions, and we'll be expecting you guys to really join in. Obviously, it'll be a smaller group, so it will enable peer-to-peer conversation, hopefully bringing live experiences and being able to share, and then ultimately building connections that can last through your careers, there where you may need some advice or something like that. Keen to ensure that it's process driven knowledge, stuff that you can actually take back into your business, and then ultimately hopefully everyone will learn a thing or two and we get some upskilling along the way. So at this point, just going to check in with Adam to see if there's any questions.
We've got one question. Can you hear me?
Yeah, I can hear you. Yep.
Yep. This is from Angelica. Says, how high value is defined for SOF confirmations?
Again, it really depends on your framework. I think that depending on your business, depending on your markets, depending on your sort of customers, from what jurisdictions they come from, will really determine what your business tolerance is, and it changes across the industry. There are certain ones that may take a higher tolerance, and also the more sort of automation tools that a company puts in sometimes could enable them to take on more risk. I think that's a really important element. If, for example, you're relying on sort of 10 members of staff to do these checks, and then ultimately, are you really able to cover the whole risk? That might mean you have higher thresholds compared to being able to have automated tools that could push your thresholds down. I also think it's important to understand that it's not just the threshold base. There's many different triggers that could happen. So ultimately, there might be a backstop, but I would always encourage businesses I've worked in that you rely on almost a matrix model with different factors that lead to that. It could be that thresholds for casino use against sports use for different countries, depending on their average salaries. It could even be broken down if you're really focused on certain markets like the UK on postal and tax information. So that threshold will depend on the appetite of the business. But from what we're seeing in the business, from the regulatory pressure, it's becoming lower. And the way to manage that is to really start using some of these tools earlier on in the journey. So by the time your customer hits that, you already know everything about them, and it enables you to make a quick and swift decision that customer can continue on that volume, or they may need guardrails or controls around them. Any more, Adam?
That's the only one I can see in the chat. Does anybody else want to unmute themselves and ask any questions? Ooh, putting everybody on the spot, right? Look, that's if nobody else has got any questions, that's cool. Look, what we'll do is at the the end of this session, what we'll send out emails to everybody that attended, those that didn't attend, with the recording and also a certificate. Just to say thank you for your time. And if you've got any questions, obviously you can reach out to us directly, also Stephen as well, and we can answer any questions. We'll also give you the opportunity to download any information regarding the CPD accredited full course, which is happening at the end of after ICE. So it's happening at the end of right at the end of January. It's always weird, isn't it, when you're trying to talk, when you're talking just into the abyss, right? Hope everybody enjoyed their time. That was a good session. Thank you, Steve.
Yeah, cheers for listening, everyone, and hope to see some of you on the workshops going forward.
Perfect.
Thank you.
Take care, guys.
Cheers.